Hey, what's up, everyone? Welcome to Tuck Notes Beginner Stock Talk. Tonight, we're going to be covering Tesla stock and the overall stock market. We're going to be going over what some analysts are saying about some of the data that came out for the Chinese sales production numbers for Tesla for the month of May. We're going to go over what to expect for Tesla stock and the overall stock market tomorrow. And we have inflation data coming out tomorrow too, so that could be really, really volatile. And I hate it when this happens. This time of the year, whenever this time of the year is, it's not fun. But what we're gonna go over what to expect for Tesla stock, and yeah. So it closed at $721. It had opened up at like 750, and then the initial jobless claims report came out, and it was basically double the numbers of what was expected. I'm not going to go into like specifics, keep it just general. And so that was what was the drop that happened after that 750 in the morning, and then we saw it come back up and go up to 740 something, and then kind of get pulled back down. And so, it got pulled up because of that individual catalyst we talked about last night of the delivery numbers, and people were satisfied with them. Tomorrow we have a CPI for the month of May. We're expecting 8.2%. Yeah, whatever that is. Just being transparent, because I don't know everything. Price action that we're looking at to test tomorrow could be 750 to 760. Tesla is like slowly like this big boat floating its way slowly up. But it did get rejected, and we are having a new support kind of 700. Tomorrow, if we do not get any surprises of anything, we could see Tesla bounce back up to 750, 760, 780. But we could see, over with this too, we do have the overall stock market kind of teetering downwards. But we do have the BYD company that is in China producing battery cells for Tesla, which is great. We saw a rise in the month of May. It increased the price target to above $1,000. We're currently at $720 and expecting Tesla to reach $1,000 by the end of the year. That is one analyst, what they had to say. And so let's check out what these guys have to say. And
Yes, came out this morning in a note and said now is a good time to buy, upgrading the stock to buy from neutral, maintained its price target. However, and the analysts, they're saying that there are record high backlogs, increasing margins. Those are some of the reasons for the upgrade. A lot of it had to do with the valuation, because we have seen the stock really fall quite a bit. We also, speaking of China, have seen a reopening of China production. And while the production there is still not back to pre-shutdown levels, it's up about triple over the past month or so. So we see Tesla benefiting from some of the loosening of the COVID restrictions there.
And so much of the decline that we've seen as well in recent weeks, especially since early May, mid-April even, it's been attributed to what the CEO is going through on a totally separate issue in how he might have to unload a fair amount of his shares continuing to sell, which would essentially depress the stock price to the point where we've seen right now where, it's sitting at around $744. You compare that to some of the highs that we had seen over these past 52 weeks of $1,200 in advance of that. And so I think for Tesla, it really is about what they're citing in some of the fundamentals remaining solid for them. If they see more people purchase a mass market Model 3, which is really the car between the 3 and the Y that are going to make up the lion's share of the sales, the deliveries, the production for the foreseeable future, and making sure that they're actually opting into a higher package on those, thus propping up some of the margins there.
Yeah, I'll point out two things from this note. Patrick Hummel is the analyst over at UBS that wrote this one. He's noting that he's actually cutting his earnings per share estimates by 12% for this year because of those Shanghai lockdowns. So just something to stick away, because, of course, as the situation in Shanghai impacts the likes of Tesla, it's impacting Apple and many other manufacturers in the country. You have to wonder if you'll see more analysts slash their ratings or earnings estimates on an Apple or a Tesla here because of these lockdowns. And the next two, the innovation pipeline is seen as a key growth driver from this note, according to Humble. But I would say this is the first year where we have started to really see some strong competitors in the EV space. And it's not just GM, it's not just Ford. We were talking about Polestar yesterday, putting out a credible SUV. Now, none of this is coming to scale anytime soon, but still, this promise that Tesla is going to have new rivals in the EV industry, this has been the year where a lot of these new entrants have finally brought their things to market, and they're starting to scale them up in a big way.
Well, and in China itself, there's already robust competition, right? So let's talk about NIO for a second, because that company reported numbers this morning, and the numbers were disappointing. I mean, that said, it is one of the competitors to Tesla, but the company came out with second quarter delivery and revenue forecast that missed analyst estimates. That's why the stock is down some 7.5% today. And if you look at the vehicle deliveries last quarter, just under 26,000, they actually delivered fewer vehicles than Xpeng and Li Auto, which are another couple of EV makers in China.
Absolutely. And on the topic of NIO, the vehicle margin, 18.1%, that was actually a decrease versus the 21.2% margin that they're seeing per vehicle. So a declining vehicle margin. You've also got the broader production issues that we've been monitoring, especially for companies in China that are trying to produce these vehicles, make sure that they're still hitting on some of the delivery metrics. And overall, the increases in revenues from the first quarter of 2021, I mean, sequentially, there is not much that they're able to grasp onto here. But if there's anything that we can look to, it's the broader wave of consumers who are still looking to opt into an electric vehicle in some capacity or another. It's really going to come down to, I think, as well, where these companies fall within that range in the high value, high cost kind of part of this equation too.
I'll just quickly add two good, helpful note by Jeff Chung over at Citi on NIO, noting that June sales volume, if they hit the top end of their guidance, could be up 84% month over month as some of those lockdowns ease. That is helpful, but I think we are seeing the stock, maybe there's a contrarian take here. There's still a lot of questions about.
Well, that's NIO stock. Anyways, if you like NIO, go ahead. This is a Tesla stock channel, so tomorrow moving forward, we can expect key support level 700. If we do not get any big surprises, if getting inflation rate of 8.2%, if we don't get any numbers that's above or below this percentage, the stock market could definitely go higher. But if we get a surprise, we could see the stock market be down to 700 and go lower. But it could go higher. All right, it might go lower with this inflation. However, it could go from 700 to 600, 760. Okay, that's another thing. But the overall stock market will be getting, people are uncertain about the data that's going to be coming out tomorrow. And so that's kind of like why everybody's on pins and needles. All right, so the most important thing to be on the watch out for is the inflation. Is if the inflation trend is lower, getting lower and lower. That's the most important thing. We have another interest rate hike coming up soon too, and so these are all things that would push the stocks down value and make it a good time to buy. So I hope this video was helpful. If it was, go ahead and push the like button. If you like these videos, feel free to subscribe. It really helps out the channel. Hope you guys have a good night. Talk to you later.